You're welcome back. You're still watching Business Morning on Channels Television. Well, Nigeria's gross domestic product grew by 0.51% year-on-year in real terms in the first quarter of 2021, slower than the 1.87% growth recorded in the corresponding quarter of 2020, but higher than 0.11 recorded in the previous quarter, which was the fourth quarter of 2020. The figures for the second quarter shows that the economy grew 5.01. That's like the reverse of what it was in the first quarter. Well, to help us understand the details of it, we have Damilola Akimbami, as we earlier introduced, the head of research at Financial Derivatives, joining us this morning. Good to have you again, Damilola.
Good morning. Thank you for having me.
Yeah, so this is higher than... I don't think anyone got this high.
No, it's significantly higher than the market's expectations.
Yes. So what do you think made it this high?
Well, it's just base effect. Because, we're coming from a very poor base, which is Q2 2020, and that's when we recorded a sharp contraction of -6%. So obviously, once your base is very low, definitely that the impact is magnified. So we also know that obviously since then we've seen recovery and resumption of business and economic activities across most sectors. Domestic and international trade has picked up. So what we've seen right now is, at least in the first half of the year, the Nigerian economy has grown by about 2.7%, and that still puts us on track for the IMF's growth projection for the country for this year, which is around 2.5%. So that means in the second half of the year, Nigeria should be growing by about roughly 3% to still bring us to about 2.5 to 3% full-year growth. So we've recorded 3 consecutive quarters of positive growth, so that shows that Nigeria definitely is on its growth trajectory, but like I mentioned earlier, it's primarily because of base effect.
So should we be excited?
Oh,
yeah,
well,
because when you say base effect, it sounds like...
If you look at, we will analyze the breakdown of the sectors now. If you look at both non-oil and oil sector, oil is very important to us because of the revenue impact and the external position impact, but the oil sector contracted even further by almost 13%. And if you look at the numbers released by the NBS also, production levels to drop to about 1.6 million barrels in Q2. Bear in mind that this is inclusive of condensate, so if you remove about 400,000 barrels, that puts you to about 1.2, 1.3 million barrels produced in Q2. And if you look at that quarter also, oil prices increased compared to the previous quarter. Oil prices averaged about $69 per barrel compared to the previous quarter. So that just shows you that Nigeria is more production sensitive than price. So you can be experiencing higher oil prices, but if your production levels are not commensurate, you might not necessarily feel the impact. And that's even output, talk less of the revenue impact and the impact on Forex. And bear in mind also, quickly, I want to, before I go further into the breakdown, I want to mention that, yes, because you mentioned that, oh, wow, should we be excited? Right. Bear in mind that the year-on-year growth was 5.01%, but if you look at the quarter-on-quarter growth performance, the Nigerian economy actually contracted by about 0.79%, and that's because of seasonality, because we know in Q2 that's the beginning of the planting season, so obviously output levels have declined. So now back to the sectorial breakdown. I've talked about oil. Now, the non-oil sector was the major driver of growth. The oil sector grew by about almost non-oil sector grew by about almost 7%. And contributes about 95% to GDP. And if you look at what constituted this increase in the non-oil sector, it was primarily from power, so electricity, gas, steam, and air conditioning supply. That grew by about 78%. That's significant. It was a sharp spike from 8%.
What drove that 78%?
So, in Q2 2020, it was lockdown. Definitely. So a lot of people were working from home. Yeah. So that commercial demand, so obviously offices were closed down. So that demand wasn't there. But now we've seen that more people are still working remotely, but we've seen a lot of businesses reopen. So a lot of on-site activities are occurring. So definitely that impacted positively on the power sector. Transportation also grew significantly by about 76%, predominantly road transport, which grew by about 92%. Again, last year, it was lockdown, no movement, there was restriction. But now, obviously, we know that, like I said, domestic travel, international travel, so that also impacted positively on the growth numbers. Trade is another important sector that also grew by about 22%. Right. Obviously, the reopening of the borders has impacted positively. Last year, borders were closed. The borders were reopened sometime in December. So that has impacted positively on trade. Manufacturing also grew construction also in Rio, and we know that the government has invested a lot, especially on road infrastructure. Now, if you look at these sectors that I've mentioned, they're not necessarily job elastic, apart from trade and construction, but these sectors have a significant impact on productivity. And if we can improve productivity, definitely output levels would increase. Now, if you look at the sectors that actually slowed, agriculture slowed, obviously because of seasonality and the insecurity that we are experiencing. We also know that, for instance, now, well, I mentioned earlier, slowed. ICT is interesting because one would say that, oh, because increased demand for data and what have you. But what I would say is that this time last year, in Q2 2020, there was no ban. The NCC rather had not imposed the ban on SIM card registration and whatnot. Definitely, we know that it was in April, early April, that the ban was lifted. Or I think there's a time lag. So we'll definitely see the positive impact of the removal of that ban in Q3 numbers.
What about real estate?
Real estate, funny enough, real estate too actually slowed. So you would have thought that, or it improved marginally. You'd have thought that, oh, because construction increased significantly, but cement manufacturing slowed. So what you could say also is that for construction, it's more about civil works. And like I mentioned, the government's investment in infrastructure. Real estate also is more about consumer demand, which we know that has been constrained because of low income. So that has affected real estate and cement manufacturing. So these are some of the numbers that we're seeing. So non-oil sector definitely was the driver of growth. The services sector is still the major contributor to GDP, then agri and industry.
Does it say we're going somewhere with our diversification, since we see it's the non-oil that actually drove this? Does it say that we're heading somewhere?
Yeah, well, it could point to that. But again, this diversification, this is output. So like I always try to emphasize, in terms of output, Nigeria is a well-diversified economy. But just looking at the number of activity levels that we have. But in terms of revenue, which is the main focus, we are still heavily dependent on oil. So that's why, despite the fact that oil contributes just about 7% to GDP, in terms of revenue, in terms of forex, it contributes over 80%. So you can't necessarily say that Nigeria or the government, federal government, has completely diversified away from oil in terms of revenue, or when you're looking at it from a revenue point of view.
So when can we expect to feel the impact of this growth, the ordinary man on the street?
Well, we know that the government has come up with a lot of reforms and plans. Was it on Tuesday that they talked about launching development plan, which will be launched sometime in October or December. So right now, Nigeria, despite this positive growth we are seeing, Nigeria is still experiencing, or is still in a recessionary gap. So what you need to do, you need to have a combination of the right policy reforms at the right time and also the right quantity. Because, for instance, if you are investing, like, let's say, $2 trillion or naira rather into your economy, but you need about 5 trillion, obviously that quantum is not enough to stimulate growth. So it's a combination of several factors, and you have to have a long-term growth trajectory that is also job creating, because you need to create more job opportunities so that more people are employed and so you can produce more. Because if you look at the Nigerian economy now, growth rate, cumulative first half is about 2.7%. That's still lower than your population growth rate of 3%, meaning you're not producing enough to feed the people. The potential growth rate for the country is about 8%. We are growing at 2.7%, so therefore, that means they are underutilized resources. So you need to be able to, you need to implement some reforms that would address these issues and again have that long-term growth trajectory, because it's not going to happen overnight. So you have to have a plan and ensure that as you're putting these things in place, you're also creating more job opportunities. Nigeria is already tagged the poverty capital. We have one of the lowest life expectancy ratio of about 53%. So obviously, where there is poverty, there's social unrest, and obviously that would affect
so let's zero in a bit on agriculture. I mean, after all, these commodities.
Yes, it's a commodities segment.
And like you noted, it slowed. Should we expect the next quarter to be better, especially, I mean, the harvest season is here and all that. Should we say that it's just because of the planting season? So the next data we should get should actually give us a little bit of hope.
Improvement.
I think for agriculture, the third quarter would be, compared to Q2, will be relatively around the same levels. Where I'm saying that because, yes, we keep talking about the harvest season. The peak of the harvest season is usually around September, October, which is the end of the third quarter, the beginning of the fourth quarter, rather. So you're not going to see that impact being felt on agri numbers for Q3. And bear in mind, we still have the issue of insecurity that is yet to be addressed.
I mean, you have curfew, for instance, in Plateau State, the northern part now, there's curfew. We had the governor.
And these are this is the food belt of the country. So definitely, I think their Greek numbers are still going to remain around current levels. They'll still be positive, maybe around 1%, 1.5%, but I don't think we're going to see that much of an improvement in Q3.
Okay. Well, commodity prices still are rallying at this point, even though there are concerns over Chinese demand, easing. What do you see going forward, with, especially with iron ore? I see that iron ore is actually rallying at this point.
Iron ore was one of the commodities that responded positively in terms of the Chinese data. So their concerns are basically waning in terms of Chinese demand, because again, China is the largest importer of raw materials. So anything that happens to China would definitely impact in whatever form on the global economy. So we've seen that China too has resumed operations at its shipping port, and we discussed this on Tuesday. So definitely the fact that shipping has resumed, obviously supply chains issues would be resolved, at least to an extent. So we saw commodities rally in response, even oil rallied in response as a result of this. So I feel that because we're seeing now data showing that China sort of is addressing its COVID infection rates, if that continues and they continue to record a declining number of COVID infections, then that will impact positively on commodities, like I mentioned, because demand, that means that demand recovery is there. And even OPEC, when they meet next week, Tuesday, on September 1, that when they increase production by 400,000 barrels for 5 months, between July to December, they issued that note of caution that, look, but still a little bit skeptical about the recovery in demand, about recovery in oil consumption because of COVID. So if China's numbers come out better and stronger, and we start to see an increase in vaccination rate across more countries, then we still have some hope for demand recovery, and that would impact positively on
there
commodities.
Seems to be a gap between Brent and WTI at this point. What's causing that?
Well, Brent is light crude, so we use that as a proxy for even Nigeria's Bonny crude, which is also a light sweet crude, and WTI is the US West Texas Intermediate crude, which is shale. So definitely we tend to see that difference. Also in terms of the way the different types of oil are extracted and produced also impacts on that, and definitely the demand for sweet crude is more, and because you can use sweet crude for more things than shale crude, which is heavy crude, and obviously the amount of investment and refining required, that goes into it also leads to that difference in the price of crude. But we usually use Brent because, again, it's similar to Nigeria's Bonny.
And it's back above $70
It's back above $70, so which is good news. But more importantly, Nigeria needs to ramp up its production levels. I mean, OPEC has increased our quota to about 1.8 million barrels. So, and we're producing about 1.4.
And unfortunately, the GMD and NPC still talked about the issue of theft. It doesn't seem like we know how to. That's
one of the major issues why Nigeria hasn't been able to take advantage of it. Because you say, okay, initially the quota was at 1.4, they increased it to 1.5, now it's at 1.8, but we're still at 1.4. So it's because of the theft, the disruption to pipeline vandalism, and also force measures that have been implemented by these international oil companies. So that's why Nigeria hasn't been able to ramp up or increase its production levels.
And worryingly also, we do not know for certain our consumption daily. That's worrying also.
Yes, that's also
But anyway, let's just take us through activities in the global commodity space.
Yeah, so like we've just discussed, we are seeing that rally in commodity prices, and more importantly, wheat and corn, which are some of our imports, and we're seeing an improved supply in the US, which is obviously impacting on price. So because there's improved weather and an increase in production, that has led to a fall in the prices of these commodities. Cocoa, we export cocoa. We're experiencing increased supply, or there's increased supply in Ivory Coast and Ghana, who are the two largest producers of cocoa globally. So that has dampened cocoa prices. That's not good news for us, because we need cocoa prices to be higher than what it is right now. So these are some of the things that we're seeing happening in the commodities market. And I think at least in the next couple of weeks, this would continue to play out. For oil, I think oil will continue to trade around $70 per barrel. And bear in mind, again, we're entering the end of the summer driving season in the US, so definitely for demand will definitely is going to ease up. So it will be interesting to see what the outcome of the OPEC meeting would be next week, Tuesday. Yes.
Okay.
All right. Thank you so much, Damilola
you.
Akimbami, Head of Research at Financial Derivatives. Thank you for sharing your time.
Thank you for having me.
Thank you.
So we'll take a break now. When we come back, we do have another conversation for you. It's something very revolutionary. Join us after the break.